Welcome to Nasdaq TradeTalks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining us for this segment, we have Scott Melker, crypto trader and investor, also the host of the Wolf of All Streets podcast and author of the Wolf Den newsletter. Joins me to discuss if Bitcoin and Ethereum are broken. Scott, it's great to see you as always. Welcome back to Trade Talks, and you've been pretty active there on Twitter having this conversation.
Well, it's the conversation that everyone's having right now. Obviously, congestion in the Bitcoin and Ethereum networks, which is not at all unexpected. But I think for many people, why it's happening is what's unexpected. And that's largely because of memes, meme coins, ordinals, as people call them on Bitcoin, BRC20 tokens, all things that nobody here needs to truly understand. Just know that people are minting meme coins all over Bitcoin and Ethereum networks, and it's making fees high and it's making transactions slow.
And you made a great point. You said if fees to use an asset become too high, it just becomes another luxury asset class that only a certain amount of people can access.
Yeah, I think that's true. Luckily, there are solutions, which is layer 2 networks. And once again, it's kind of complex jargon, but you can basically bundle a whole bunch of things on one layer and then go settle them on the main layer to avoid all of that congestion. That is much more advanced now on Ethereum and proof of stake networks than it is on Bitcoin. So right now it's going to be a bit of a problem for them to figure that out. The good news is that people can still get their Bitcoin transactions through. They just might need to pay more to do it.
Let's switch gears to talk about the debt ceiling, which of course is the conversation du jour in the month of May, and what's happening within the banking space. How do you think these coins could react should we continue to kick the can down the road with the debt ceiling and a resolution is not made?
It's a really tough question. It'll be interesting to see what happens. First of all, I'm pretty confident that we will see the debt ceiling resolved and that we're just seeing a very high stakes game of chicken. This time it's different after we've seen it resolve 60, 70 times. It's hard to say, but there's always the possibility, especially when you keep in context the fact that Speaker McCarthy took about 15 votes to get brought in. So there's some dissension in the ranks, I would say, in politics. So maybe they're a little willing to go a little further this time than they were in the past. But in the worst case scenario where the debt ceiling does not get resolved, if the economy tanks and the market tanks, I would expect at least short term to see that crypto would struggle as well. Bitcoin itself could surprise us, I think, and go up, but I think the rest of the market would probably have a rough time. That said, we have seen Bitcoin react positively to the banking crisis, to all of these sort of economic negative news. And so maybe we are starting to build steam on that narrative that it's a store of value and more of a gold than a stock.
Right. But then it also goes back to your point before, too. A store of value is one thing if you can afford a luxury asset such as that. But if fees continue to go the way that they are, store of value doesn't really mean much to the average investor.
Well, it does if they're just holding it, right? If you're not actually actively using the network and you're just buying it on an exchange and holding it, then you're not using the network. So you don't really have to worry about that congestion and those fees. But if you are someone who's actively using it, listen, this is problematic. If you live in El Salvador and don't have a huge balance in your wallet and you want to move $10 around in Bitcoin, which used to cost very little, a few pennies, and now that might cost you $20, $30, and it's obviously not going to happen. So I think, unfortunately, that's the level where it's going to affect people. The ones with the wealth, as we sort of alluded to earlier, the ones who aren't going to mind paying that slightly higher $30 or $40 fee to do what they want to on the Bitcoin network. But hopefully we'll see things like Lightning and other layer 2s solve this problem.
All right, Scott, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.